this earnings period is going to be a lot of intensity, a lot of focus from investors related to commentary about AI contribution in 2024. I think that is the A topic that's going to orbit around the Mag 7 for this earnings period. And I suspect that the commentary is going to be relatively muted, or the commentary will be, we expect some contribution. The good news, so I think that could cause a near-term pause in some of these stocks. I think the good news for a lot of these, for the companies, if you look at the estimates for the December quarter for the growth rates, and then for the full year of 2024, December 23 and 2024, analysts aren't really expecting much contribution from AI. I think psychologically, it's a bigger topic than it is relative to the numbers. But I think that these companies are going to continue to do well. I do anticipate this earnings period to be mixed in terms of the stock reactions.
Early Gene Munster, Munster's so large. There's early Gene Munster, middle Gene Munster, and later Gene Munster. Early Gene Munster was 14 pages from Piper Jaffray, which came in at 4 p.m., and you had to read it by dinner, or you couldn't focus. And in the back of it, he always had these brilliant sum of the parts analysis. Gene Munster, for the Magnificent Seven, for Apple and Microsoft in particular, what's the sum of the parts look like right now?
Well, the sum of the parts, it's ultimately, when you think about Apple, it's about services. It's about, you put all this together, I think it's better than a $3 trillion company. I think the iPhone business, today, it's just over half of their total revenue. I think in aggregate, that should trade at essentially a 35 multiple. I think that multiple is justified given, even though it doesn't grow much, I think it's justified because these devices have become substance to our life. We can't live without these, basically half the people in the US can't live without these devices. And so I think that you put this together, I think this is a $3+ trillion company. I think that there's a lot of uncertainty related to Apple at this time. I haven't recalled a time in Apple's history when there's been as much concern going into this to a quarter. There's concern about the iPhone demand. There's concern about some of the delays that they've had, or taking some of the watch off the table because of the blood oxygen monitoring. And there's also some concerns related to how their App Store policies are changing, specifically related to steering and the impact on the App Store revenue. But I think that when you course these out, I think that this is a $3+ trillion company. And when it comes to Microsoft, from a sum of the parts, there's two basic parts to it. There's their cloud business. That business say they have 22% market share. Microsoft in total is a $220 billion revenue company. It's going to grow about 15% this year. But as you think about an aggregate, their cloud business is worth, even though it's call it 15% of total revenue, given the profitability, it's 30+% of the valuation. The biggest lever when it comes to Microsoft over the next year in terms of the sum of the parts is related to what's going on with the upside and uptake with Microsoft, their Copilot and Office, that contribution. So they, of course, have raised the price, call it going from $15 to $30 a month, and that started back in November. There's about 350 million Office users. So the Office business today is about a $65 billion business of that 220 total in revenue. But you could build a case if a third of those people pay up for Copilot, which I think is conservative, that can increase revenue by 10%. And that's probably the biggest sum of the parts lever when it comes to Microsoft, is what the uptake is going to be. They haven't broken out what those numbers have been. As I mentioned, it started in November. All they've said is that they've had a positive reception from their early corporate beta testers with this Copilot. And I suspect this is going to be a hit product.